back, so brace yourself. You know, this is not financial advice, but I was checking the bull market peak signals. I will show them. I'm having some issues with my computer here, but I am going to show them to you. And actually, none of them has been popping yet. So I don't really know what is going on with this so-called bull market and where we're going in the future. Okay, it's not coming up. That is a little bit sad. I am sorry about that. Good. Let's start now with the program. Tonight we have a small pitch by a lady that has been living in the US and specifically in Miami for the past 30 years, if I remember correctly. 5 years. Close enough. Close enough. She is going to give a little overview about her history, her story, how she came to Malta and what she was doing in Miami, mostly with AI. We are going to have the Stablecoin Masterclass, where hopefully we are going to learn a little bit about what is happening with stablecoins, because stablecoins are actually a new instrument. Stablecoin, when I was a kid, stablecoins were this new tool that you have something that is more stable and less volatile than Bitcoin. Today, stablecoins are almost a geopolitical power play where everyone is launching their own stablecoins, and the future is going to be very interesting because with these new upcoming stablecoins, and there are many, there's also opportunity, and this is what we are going to talk about in the Stablecoin Masterclass. I see my computer has almost given up because I have some funny VPN, but we are Crypto Hub Malta. That's what I wanted to say. That's what I really wanted to say from the bottom of my heart, to give you the usual announcement about Crypto Hub Malta for those of you who might be here for the first time. Any one of you who is here for the first time, up with the hands. Who's here for the first time? All of you, welcome, welcome. That's what I wanted to say. All of you, welcome. Don't feel shy. Look to your left, look to your right. That could be your exit liquidity. No, I'm joking. Make some friends, be kind to each other, and this is something special because you're actually looking to your left and your right, and you can make some friends. You can talk to real people as opposed in the internet where you are just getting scammed. And this is something special and beautiful. Now, we are Crypto Hub Malta, the blockchain community in Malta. We organize in-person meetups here every week, every Wednesday. We start at 7, program starts at 8. Physically, we are at Soho Office. Soho Office is a co-working space. They have 3 locations in Malta, 2 locations in Cyprus, and they are going to open one in Mozambique, I was told. This is the Strand, the main location. You can book it, you can rent it. They have a spa, a gym, a cold plunge, and a sauna in the first floor. Second, third floor are shared offices. And here in the 4th floor where we are, it's the event location that we are using with a beautiful Valletta view. It stopped raining. So we are going to start right now. But before that, I will just say a little shout out to our kind supporters that make this possible. It's WH Partners. They are here, they are supporting us, and they are crypto lawyers that can help you with taxations or any legal issues that you have or might not have or might not even be aware that you have. If you talk to them, the first consultation is for free. If you come as a referral from Crypto Hub, 10% off. Also, the Bit Research. Actually, one of the directors of the Bit Research is going to talk tonight. It's Fran. He's a legend. I am sure many of you have been waiting for this to hear what he has to say. So, the Bit Research, and I'm going to read this up because I always mess it up, but now that I know that they're in the house, I better get this straight. The Bit Research is a Maltese proprietary trading firm specializing in Forex, crypto, and automated trading strategies. They are regularly looking for trading bot developers, crypto traders, and Forex traders. So if you identify as such, go and talk to them. They are here tonight. You can talk to Fran or someone else from the Bit Research that you can hit up at 9 o'clock at the bar, and check the career section on thebitresearch.com/career for more details. Whew. Now that we got this out of the way, let's get started with the first presentation from Patricia, who joins us here tonight, fresh from Miami. Everyone, Patricia.
Thank you so much, Ferris. Good evening, everyone. So I just arrived from Miami Beach a couple of weeks ago, and I'm relocating to Europe, checking out Malta to see if I'm gonna relocate here. I'm one of the ecosystem builders of Miami. I'm the president of the AI Salon in Miami, which is the leading chapter of the global network gathering AI investors with AI founders. I don't know if some people know about AI Salon. No? Well, if you're interested in AI, talk to me if you want to open a chapter in Malta. We facilitate for free. All events are free. That AI founders get funded from investors. And I'm also the president and the founding member of Innovapreneurs, which is another community that I lead. Is the organizer of Agora Eñe. I've seen that there are many Spanish speakers here. We have already an AI community for Spanish speakers. It's called Agora Eñe, and it has started in Miami, and we are bringing it now to Europe also. And I'm also one of the 10 ambassadors of Stripe. I'm sure that you know the company. I think that the masterclass tonight is going to be, awesome for everyone. But I know that the Stripe is also very interested in a stablecoin. So if someone, wants an intro, just let me know. They're trying to build community also everywhere, not just in the US, but also here. And I think that Malta is a community that they're interested in. So we are thinking of starting organizing also events in Malta. I'm also one of the co-founders of Miami Tech Connect. We have in Miami, not just in Miami, we have an aggregator of all the tech events in South Florida. This was the second prize of the Horizon AI Hackathon, organized by the University of Miami in February. I won together with my co-founder from Willy AI Solutions, Jeffrey Batista, and we offer it to the ecosystem. So basically, we built with Agentic AI an aggregator of all the tech events in Miami-Dade County, Broward County, and also Palm Beach County. And we built an explainable AI to make the recommendations. Because until Miami Tech Connect, we had to go at least to 20 different platforms just to check the events. So no one had the time to know about the events, and we were missing a lot of events. We are currently having like 2-3 AI events per day somewhere in the ecosystem. We started like being very active 18 months ago. And in just 1 year, we went from number 14 in the ranking for pre-seed to number 6 worldwide. And also we are number 8 now in seed stage. And also this is, pro bono that I do. I'm a volunteer, but I'm actually an investor. I'm a venture partner with Broadline Capital, which is a global private equity firm, but is actually like a very, very late stage VC. And now we have just incorporated a global nonprofit like Endeavor that we are bringing to Europe. And we want to support local ecosystems. So I hope that we can also help this ecosystem and making it grow. And I'm an AI startup founder also. I'm known in Miami as the queen of AI because I've been very active in AI for many years. When people ask me, I got my first computer 41 years ago, and I started already using AI, but conventional AI, right? And I'm 47. I don't have any problem saying it. So I know that when everyone was born here in this room, AI was already there. A lot of people are not aware of that, but Gen AI is not the only technology. We have had many, and after Gen AI, we had the constitutional, the cognitive. I mean, embedded is everywhere, right? and many others, right? Explainable is now one of the trends, agentic AI. Very proud that agentic AI comes from Miami, from Hialeah, and that I know the inventor, Kai Gomez, which actually has also a Spanish roots because of his father. And yeah, I don't know if you want to something. I'm also part of the Seaworthy Collective. Is the #1 accelerator in the US for blue tech. So if someone is interested also in blue tech, I can make intros. And I'm also the AI resident of Negocios de Carne y Hueso in Intereconomía, which is the main economic channel in Spain, and it has 400 million potential audience every week. So, and that I do it in Spanish, and I think it's
Okay,
enough.
that's it. Let's wrap it here, Patricia. Thank you very much.
Thank you so much, Ferris.
Are there any questions?
Any questions? Any questions?
Patricia is
I'll
live
be
here
here.
from Miami. Now is the time to ask a question if you want. Or you gonna... Sorry? Question?
Yes. Hi.
No, the mic, no. I hate the mic.
So
know
that
that.
everyone can hear you.
Patricia, can you give us a more explanation of what AI Salon is, what it does?
In Spanish?
No,
Or-
what it does AI Salon, in English. No, don't everyone speak Spanish.
Yeah. So AI Salon is the, yes, so he's asking about what is AI Salon. AI Salon is a community, but it's a global community. We are already very active in over 60 cities around the planet. Okay? So not just in Europe, in the US, in Australia, everywhere. And we want to keep opening chapters because we are educating the community first, but we are the only ones facilitating funding for AI founders because we are the ones gathering the AI investors with the AI founders. I will say that 1/3 of the audience at the AI salons, maybe not in every chapter because there are some ecosystems that are smaller, but at least in Miami, normally we have 1/3 of the assistants, of the participants that are AI investors. So we facilitate for free that introduction, and we are going to launch also now a syndicated fund also from AI Salon. Education, and if anyone is interested in opening Malta, just talk to me. I'll be happy to connect you with AI Salon Global. It will be awesome to have the AI Salon in Malta. De nada.
He says, gracias muchas. Thank you very much. Thank you very much, Patricia. Go hit her up after the masterclass, Stablecoin masterclass. I don't know what the problem is with the microphone. It works just fine. But, but you need to, thank you. Thank you very much, Patricia. You are naked. But you need to talk into it. Now, the next speaker, the main speaker of tonight, Fran, or as we call him, as some people call him, as I call him, Fran the Man, the DeFi king of Malta and one of the directors of the Bit Research, is going to give us the Stablecoin Masterclass. Thank you very much, Fran.
Thank you. Okay, let's do it. I'm back. So I'm the co-founder of the Bit Research. Basically, we are kind of like a small private fund, which in my opinion, it makes the difference quite a lot because we depend on how right we are, basically, and we must be right, and we trade only with our own funds. So really, we really depend on being right on what we do, basically. We don't provide any service, and basically we just trade the internal funds. That's what we do. So I want to talk about the stable coins because...
Open the link for the stream.
Ah,
Sorry, little technical issue.
okay, wait.
No technical issue. That's the rule.
So select the screen. How was this?
It's for the international server.
Yes, big green button and then go to entire screen and the second one. Or just the first one because you're mirroring it. Yeah, so just click. Select the picture.
Should we accept?
Boom.
Your crypto belongs to us now.
We are live. Okay. Okay, let's do it. So I want to talk about the stablecoins because I think it's really important topic. Is the killer app of crypto, and basically it's very simplistic just to think that is pegged. Pegged, it means that it's $1 to $2 basically. It's something very simplistic, and I think that everybody should know how it works. So basically now I will do a very pragmatic explanation of how they work, why they are that good, and in the end I will explain too how to monetize it. So basically after all of this you will know very well how they work. So let's go first. I will put some slides, but you don't have to get crazy reading into the slide, okay? I will explain everything. Basically the first thing is the business model, is how they make money. How they make money is very simple. For example, USDT and USDC, if you want to mint a lot of them, because to buy them in the free market, it can be costly. Imagine that you want to mint 1 billion. So basically, you bring 1 billion to Tether or to these people. Basically, you send the USD, the stablecoin, deposits, and they just buy treasuries. They buy bonds. It's the only thing they do. When you give money to them, they buy bonds. And basically, if you do this at a scale, imagine Tether right now is 170 billion market cap. So imagine that if you have 100 billion in circulation, you are making 4%, 4.4 right now. So it's really crazy money. Tether right now is making 7 billion profit per year thanks to this model. It's very simple model in that way. So they just receive the money, they buy treasuries, and basically this is based in the hope that the treasuries, the government is going to pay the yield and is going to continue printing money, basically. So, and why they are gaining so much popularity? For example, many use cases like that can be faster, cheaper cross-border payments. Imagine that instead of using MoneyGram or all of these services that in small countries they can charge you up to 20%, basically this is a really straightforward system for remittances. You can just remit money from side to side, super cheap. Some people, they can think, why don't you do it with Bitcoin? The problem of Bitcoin is that since it fluctuates, every transaction is a taxable event. So basically, as you are making a lot of payments, then you will have to do the calculation of how many taxes you can pay. So that originates a big problem. Financial inclusion is something very interesting too, because in a lot of countries, the people is using stablecoins as a saving account because they do not have accounts, because they do not have a home, they don't have bills, they don't have documents. So this is for first time in history in their lives. Now they can save money thanks to stablecoins. Stability in a volatile market, but this is simply if you change in the blockchain, inside the blockchain from other assets to this. The growing use in DeFi, this is here like financial inclusion. Basically, thanks to stablecoins, now all the unbanked people, the ex-unbanked people, now they can use a financial system, which is something amazing. And we can think that in the end of the day, stablecoins, they are tokenized debt in the end of the day. It's tokenized debt because the collateral, what is behind that, is basically treasuries that they are on the custody of Tether or USDC or whoever is the company. Now I'm talking about centralized companies. The decentralized ones, it would be way more complicated. And tokenization is also something very important. For example, imagine that you buy stocks, you buy Tesla stocks. Me that I'm used to use the blockchain, it's a bit funny sometimes. Imagine that you want to transfer that stock, you cannot do it. I mean, if you don't use stable coins, you always depend on a third party. You cannot use money from platform to platform. You have to send it to your bank, then you have to send it to the platform, lo cual is really inefficient. Then some of the top benefits, for example, faster settlements. I don't know if you know, but if you have a business, the settlement, it happens much after. So if there is a claim or there is a problem, basically the money can disappear from your account. And that, if you are a business, that's a problem. You can have a large amount of money and the real settlement, it really takes time. So basically, here we have instant settlement, which is really a superpower, and you don't need clearing houses and all the mess and all the fees that originates. Transparency, I don't really agree with this, but whatever. Liquidity management, integrated payment flows. This is more about composability that you can do with stable coins, is way superior in that sense, lower transaction cost. And we have to think that in the end of the day, these are real world assets. There is a lot of talk in crypto about real world assets. Some people is complaining about that, but we have to be aware that the stablecoins, they are already real world assets, and they've been used for a very long time, since Tether started, well, kind of long time. Since Tether started, that this is kind of tokenized debt, basically, who was already in the blockchain. So, more of the uses. Yeah, here I'm repeating myself maybe. Stablecoins, daily purchases, blah, blah, blah. Sorry for this one. So Tether, as we can see, this is a really, really, really amazing business. Tether is by very, very, very far the most profitable company in the world by employee. So this is really a superpower, and this is something that it only happens in Web3. The levels of efficiency that we can see is insane, that they make 45 million per employee they make, thanks to basically accumulating treasuries. And I didn't put the slide here, but actually the US government and the governments, especially the US one, they are really happy about this, because basically these guys, they are accumulating a lot of debt, which is really good for them. Because if nobody is buying debt, it creates a problem, because then the interest rates, they go up in the free market. Because the interest rate that they can change is only the 3 months interest rate. They cannot change all of them unless they start quantitative easing, of course. But basically, they are really happy because these guys, they are showing up to buy debts all the time. And right now, I think they are the 5th or 6th biggest in the world, having, as countries, I mean, if we count by countries, holding US bonds. So they have a really, really big amount. Above countries like Saudi Arabia, Germany, most of the world, basically. So why to launch one? So basically, they have a lot of advantage for the issuer, but also for the users. But for example, the reserve yield is what we were talking about, that they are getting all the yield from the bonds. They are pocketing 100% of it. Ecosystem locking is basically, this is another of the reasons that many banks, they launch stablecoins, because basically, if you get your clients to use your stablecoin, it's a kind of a way to lock them in. So they have a lot of data, fees and spread, market making. So it's not only the interest of the bonds, but they have even more sources of income, which the user is not paying. And as we can see, this is the margin of the banks right now that they are compressing non-stop. The margins right now, they are way smaller than the stable coins, which is creating some very interesting situations, because, for example, when you deposit money, when you deposit money, in reality, you can call it in many ways. When you deposit above the limit that is insured by the bank, so basically that bank deposit is something like the insecured bank liability in reality, because they will not pay you back, they don't have to pay you back if you have the money there. So this is a bit of a funny situation, because in reality, here, yeah, they give you an IOU that is their liability, and then basically they say, okay, we will pay you, but they don't have to pay you if you put money above that. And that makes a bit funny situation, because basically, if you compare stable coins with bank deposits, in my opinion, the stable coins, they have more advantages, because they are way, way more audited, and they really force them to have the collateral there all the time. The banks, for example, the last time that the regional banks, they blew up in the US, the US government, they literally said that they will bail them out with any money. So in my opinion, this is extremely dangerous. It never happened before. What this means is that basically they gave the license to gamble even more than they are doing. We have to bail them out every few years. So basically, after saying this means that they are gambling like in an absolutely reckless way. I'm sure about that. For example, in their bonds holdings, as the bonds, they went down a lot, there is a hole of trillions of dollars right now. But the government, they just say, okay, you don't have to sell the bonds now. You can sell the bonds when they are at maturity. Basically, they are already bankrupt. If you really audit the accounts, if they have to sell the bonds now, they are already bankrupt. And in the case of the Stable coins, for example, at least they have segregated reserves. If you put the money in the bank, you put the money in one bank. If that bank blows up, that's a problem. This risk, DPEG, redemption, I'm showing you now the theoretical risk, okay? DPEG, I disagree with this because basically DPEG is if the collateral is safe, you don't care if the stable coin loses the value like it happened with USDC for 1 week. That's not a problem because the collateral was there. And even on top of the collateral, you have the market cap of Circle that is huge. They could basically even sell equity if they wanted and cover the debt completely. No, that's not a problem. Yeah. Actually, I remember I was watching Paolo, the founder of Tether once, and he mentioned something very interesting. He said basically that they are so dominant because they had no competition basically. Nobody in traditional finance ever tried to do what they do. That is basically give an application for the people, for everyone to be able to use it and to transfer value. And now traditional finance, everybody's trying to copy the model. Is really amazing. And this is transaction volume. As you can see, stable coins, they are already officially surpassed Visa and Mastercard, which they are huge providers, and this is 2024. This is not 2025. Now, at this point, they are probably doubling. So they are getting an insane amount of traction. Oops. So basically, this is the market cap of stable coins. A bit slow, this one. Which is really skyrocketing because of the huge demand. And basically, I mean, stable coins, they're a big breakthrough. Is basically the payment system is an absolute bless for the payment system to be able to do direct payments is something amazing, to be honest. And then I will talk something about Visa, Mastercard, that we were talking about that. I find it a bit funny sometimes. I've been told a few times already, why do you pay with cash? Why you don't pay with card? It's so comfortable. So I will tell you something about this. For example, one of the main reasons that the digital euro is coming is because Visa, Mastercard, they are American companies. And 2 American companies, they have the monopoly in the whole European payment system. So they can do whatever they want. And apart of that, when you pay by card, the business has to pay 2-3%. And this 2-3%, of course, the business is going to pass it to you. The business is raising the fees 2-3%, and you are paying the fees. And yet the people, they think that is for free. No, it's very far from being for free. Plus, you are losing all your privacy and everything what you are doing. Plus, now we will get the digital euro on top of that. So it's quite big of a problem in reality. And basically, this is very dizzy, but this very can make you a bit dizzy, but you don't have to read it. Basically, in my opinion, I mean, the digital euro, at least the first version, is not going to be bad at all. And actually, they will cap the amount that you have to put inside, because they are scared about a bank run, which stable coins are a danger too for a bank run in reality, because they give so many advantages compared with basically banks and many things that you can do that is a danger. It's a danger, but it's really complex mechanism. At the end of the day, is something that you can go deeper and deeper and deeper. Nobody knows what is going to happen, but I mean, innovation is innovation, and innovation doesn't get stopped. So now let's go to the DeFi side. For example, here, this is the biggest DeFi protocol. Here you can deposit the euro, the crypto euro, let's say, that is the euro from Circle, the second biggest issuer in the world, and you can pay 3%. That is actually above what you get paid buying bonds. And actually this just went down, but it's been 4% for a long time. So basically, here you have the custody of your money, you have segregated funds, you have a lot of advantages, and you can just deposit it here, and this is the most simple thing you can do by far. You can deposit it here, and that's it, you are in control. we are already in DeFi, okay? So here, this is what it was considered for a very long time like a central bank of crypto. This was called MakerDAO before, now it has rebranded. And this savings rate is basically kind of like the interest rate of crypto, kind of. It moves slower than it should, but yeah, basically this is like a big decentralized central bank. Now they are in the rebranding. There are billions and billions here. We can see only 4 now because they are still migrating. But basically, you can put dollars here to work very easily. And then if we complicate it more, this is the section, let's say, of how to monetize stablecoins. So with the stablecoins, basically you can put it in these DeFi protocols. These are the safest, never been hacked. You put it, very straightforward. That's it. But if you want to complicate it, basically, this is Pendle Finance. This is very, very popular crypto protocol. Basically here, this is the API that you can get in all of these experimental stablecoins. So what is happening now, these are the centralized stablecoins. All of them, they have different mechanics, different flavors, different collateral, different everything. So basically, here, by depositing the money here, you lock this interest rate, basically. The thing is that here, this interest rate is basically compressing, let's say, what the application is really creating organically, plus all the incentives. I will not explain all the mechanics behind. But basically, as this is a growing sector and there is a lot of experimentation and there is a lot of incentives, basically, all of these new protocols, they are incentivizing the new users, paying, let's say, if I simplify it, they pay their tokens, it's like giving you equity, it's a way to bootstrap customers. So basically, if you go here to Pendle Finance, it's actually a very good place to research if you want to get good yields. You can see that they are sorted from biggest to smaller. And here you can see a ton of different yields, ton of different projects. And it's not even that difficult. I mean, you need some DeFi background, but now with ChatGPT, you can really kind of speed it up, the research in this stuff, and you can get very high yield and get all of these opportunities. I mean, in general now, I think we have to have the eyes open because as this is a new sector, it's been very, very, very incentivized. So basically, you can really collect a lot of these incentives. So, and if you still want to use a car, basically, I will recommend 2 of the ones that I prefer. For example, Gnosis Pay is a very big company, and is the first one that is self-custodial. So basically, your funds, they are not in a bank, they are not anywhere, they are in smart accounts, which is quite interesting. And this one, for example, if you buy only 100 euros of their token, something like that, you already get a 2% cashback. Still, you have to have a look to all the fees, but 2% cashback is way better than what the banks they are offering us right now. And here, EtherFi is another pretty big card too, which I'm not going to explain fully. But here you can get, as you can see, you can get very big cashbacks, and it depends. You can do staking or simply with the volume of all the money that you are spending, you can get very interesting cashbacks. So in these 2 ways, either in DeFi or in cards, is a way that all of you can get advantage of this revolution. And that's it for now. Here is my X account. If you can hear some news, Berry's news lately, and some memes, this is the place to go. Thank you.
Questions? If you have any questions, up with the hands. Where's the other microphone? I will give this microphone to the question that is outside, and then I will look for the second microphone.
So I'll be quick, but I have 2 if you don't mind. First one, which I really want to hear your opinion, is the collapse we just had, like on the 10th of October. Most of the people think that this is China tariffs, blah, 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 but everybody that actually understands crypto knows that it was the DPEG of Athena's USDE, and the practically two big pools that we had from Solana and Ethereum. So what I'm trying to say is that if you can DPEG USDE with $60 million, then how do we know that this is not going to happen on Tether when we saw this before as well? Tether and USDC were DPEG'd as well before. Just want to hear your opinion how safe we are now that we have a lot more than previously when they were DPEG'd. And second, I want to hear what do you think about the algorithmic ones, because those after Terra Luna everybody stopped talking about, and it's actually a very good idea, especially since Cardano has the JED and Shen algorithmic stablecoin still running 2 years without DPEG. Just wanted to hear about this too. Thank you.
Yeah, no problem. USDE, in reality, when it depegged a lot, it was in Binance, in reality. It was in Binance, and the rest didn't depeg so much. I mean, the thing is that because how the liquidity now works in crypto now, the concentrated liquidity pools now, especially on chain, they are really bad for this kind of scenarios in reality. So it can really get like out of range, and then the price, they can do a lot of funky stuff because there is no liquidity if you once you get out of the dollar. But in my opinion, that's not a problem at all, because in reality, for example, myself, when USDC went out of peg, I went giga long leverage USDC. I think it's going to be a ton of capital. It can lose the peg, but it's going to be a ton of capital that is going to arbitrage it back. Because, for example, what I did is basically I was researching if they really still have the collateral, if they were still solvent. But if you know that they have collateral and they are solvent, then it's not a problem. They can, in my opinion, it's just an opportunity, because then you can just go super long leverage and then you can make a very good trade, like I did, for example, when USDC depeg. And yeah, I think it's mainly noise because of that reason, yeah. And the dump, in my opinion, people were too complacent in general, yeah. People were too complacent, and this is what happens. When people get too complacent, and basically when the volatility starts compressing, the problem is that the people starts getting used to it, and all the trading systems and everything starts compressing in this low volatility, and it's counterintuitive, but this can create very high volatility, because in the moment that it goes out of that volatility range, then the things they go completely crazy. And regarding the algorithmic stable coins, to be honest, I'm not a big believer. I'm not a big believer because historically they never worked. I think they have too big attack vectors. I think they have really big attack vectors. And yeah, I don't know. To do that, I don't know. For example, Bitcoin, it doesn't have collateral. I mean, let's don't go to the electricity discussion. But sometimes the way to scale something is to don't have collateral at all. So, and yeah, there are many flavors in DeFi, really, for stable coins. But I think, I mean, part algorithmic. For example, one smart way to escape regulations is like do some peg that is not totally pegged to the dollar, but it's like a floating peg. And then in that case, it stops being called a stablecoin, which is a smart way to go around the regulation. And so I think that's very cool. Here we can do so many things. So whatever they write in the regulation, we will do something else, and then it will take another 3 years for them. So good luck. Exactly.
Thank you. Somebody else, guys?
Hi, thank you for the talk. My question is about the regulation in the crypto industry. I think on one hand, regulations makes people more comfortable to invest in stablecoins, but on the other hand, it makes it more difficult for people to go into business in this industry. I'm just wondering what's your opinion on the future of stablecoin and the regulations as an expert in this area.
Yeah, in my opinion, regulation, to be honest, I think a certain degree of regulation is needed, especially when looking at decentralization. Because if there is no regulation at all, this is my most particular take, let's say. If there is no regulation at all, basically you can run your own protocol, you know, at home. You have 10 validators at home, and then basically that's completely ridiculous, and that will create a lot of problems. So I think the limit, it should really be in the minimum of decentralization level. It should be private validators or any other system, but it does not make sense that you can run your protocol or your blockchain and you have all the validators. And the rest, I don't know. I think regulations in general delay a lot of things, but the free market ends up winning. And over-regulation, I think is really dangerous, and I think it's very interesting now. All the competition, I mean, I understand that a lot of, for example, Europe, they want to keep their sovereignty and stuff like that. But yeah, I think this is going to bring a lot of innovation in regulation too, definitely.
Thank you.
Next question over here.
Hi, I would like to know your opinion on yield-bearing stable coins like SCRV, USD. It's where, like you said, like all the companies are pocketing all the yield currently to themselves, and with yield-bearing stable coins, you can give it back to the people, kind of a bit. So, what's your opinion, and if you are using them currently?
Yeah. I mean, I think there are maybe better ways than to be a interest-bearing stablecoin, because if you are interest-bearing stablecoin, it's a bit weird for the liquidity as the coin is going up in value all the time. It makes the liquidity a bit harder. If you are pegged to the dollar, it's convenient for some stuff, and also the US government, for example, the Genius Act, they forbid centralized interest-bearing coins. So basically, maybe they will be getting in a bit dangerous area too. I think there can be smarter systems than that, but I mean, the only difference in the end of the day, once you are passing the yield, the only difference is if you pass it in a different way, or you pass it by the coin being repriced constantly. So yeah, I think they are just one flavor, and the innovation will continue. I think they are just fine, and they're part of the innovation, I would say. Yeah.
Thank you.
Love the question, and I have maybe a little follow-up question myself on this one. So how can you position yourself in the best way to profit from the yield that you can generate with stablecoins? Because the difference between stablecoins that are pegged to, for example, the US dollar is that you cannot do so much with the US dollar in your bank account or with the euro, but you can do much more with stablecoins. So what would be the best strategy to position yourself to profit from this?
The best strategy, you mean like DeFi-wise? Because yeah, that has many angles. I mean, DeFi-wise, I mean, not financial advice, of course, but for example, this is supposed to be and I think it is the safest DeFi protocol. And this one too, in my opinion, my advice is the best for this kind of things is you put some money that is not too big, that will stress you out, or not too small, that you don't care. You put some money, for some people it's 300, 1,000, whatever it is. You put some money here, and then thanks to that, it will create interest, because then you have a skin in the game, and then you should naturally start learning about that. If you stop learning about that, if you don't care, then you don't care, you leave it. But I think the best way is just to put a bit of money and to try. You can put it in Aave, you can put it here, and then you can do to some more complex and way more comfortable stuff, more profitable stuff, like it can be paying their finance. Yeah.
Okay, so something like Aave, which is by far the biggest app, the biggest borrowing and lending protocol, with like a relatively low yield, and then something a little bit more experimental with a smaller part in a more experimental DeFi protocol.
Yeah, skin in the game is the best way. Put some money, what I'm saying, not too big, not too small, that you pay attention, but and that's it. Yeah.
Friend, I pay attention. I pay painful attention. Next question here.
How do you see CBDCs integrating with the existing systems, or like what's going to be their role in that ecosystem?
No, I don't think so, because as I was telling you, the digital euro, I mean, it's all super experimental. Actually, I have my doubts that they will be able to launch it, because the government, I don't know, they don't have a story of creating that much technology. I mean, there are some sectors like war and infrastructure, but apart of that, I don't see them doing financial breakthroughs, really. I mean, and then especially, I mean, the private companies, they are way stronger than them, basically. I mean, they can do some stuff, but the private companies, they are way stronger. And as I was saying before, I expect them that the wallets, the maximum balance will be very small to keep the money in the banks. So basically, you cannot even have much balance in your wallet to start.
Well, but you do expect the banks to issue their own stablecoins anyway?
Yes, in that case, yes, and in that case, yes, those they should really go to DeFi, yeah. Because as the market cap increases, so basically they are getting the interest in a much smaller, much bigger pie, So yeah, those, for example, you have the PayPal one, the banks ones, yeah, nothing that is coming to my mind. But you can see, for example, PayPal is going quite big with the stablecoin. Yeah.
Okay, so you expect it to be like a, I guess, like a dual system.
Yeah, those. I mean, I think, yeah, yeah, well, exactly. I mean, there will be the private part with their own blockchains and everything that will exist, but I do expect it, what you asked me before, that they will be in DeFi too, because they can really grow the supply basically a lot by being in DeFi. I mean, I don't know exact regulations, but I think it's going to be a way around it.
PayPal and also Stripe, but it's not that they have a choice. Next question here.
Maybe I can add on that because I work on the digital euro, so it's gonna take some time, and I don't think that it will be integrating with DeFi soon. But maybe to that a question. Now the big banks, for example, in Germany, the DZ Bank is also thinking about issuing commercial bank money tokens, so tokenized, like normal money, bank money, commercial bank money, which can then again be integrated, but it's not that collateralized by real. It's also only partially collateralized, so they kind of joining the game with their Ponzi money, I would say. But how do you think about that?
Yeah, but now the real competition is here, so that's the problem, that once crypto, is like the elephant in the room, one the elephant is in the room, then how can they compete? I mean, I understand that they create them because, as I was saying before, it's a way, for example, if you have your own stable, then your customers, they will be using that stable. It's like another tool to keep them. But yeah, it's very hard to compete for them, very, very hard.
Next input here.
Yeah, following this topic, and since he for sure knows more than me, and if I'm not wrong, you said that digital euro is built on top of Visa and Mastercard, right?
No, they want to make their own app and everything. They want to make everything free charge and everything.
Yes, because what I know is that supposedly that you are using digital euro, you have something like a direct contact with the central bank and a direct deposit with them, so there is no need of back. And banking are only something like a graphic user interface between them, the bridge. And this is what I know from that.
No, but what I was saying before is, I mean, this is all, we're speculating here, okay? We're speculating. But my understanding is that your maximum balance, it will be really small as a digital euro. It will be something like 500 or 1,000 to avoid the bank run. That's why. So basically, you will have a balance, and you will have some balance too to spend privately, and that's it.
And I think this makes sense because of the depositor compensation scheme, because it covers up on 100,000.
No, it's simply because you will start a too big. I understand that the problem is that they will start a too fast change, because otherwise maybe it could be a bank run. So they are really, I mean, this is something that they will be tweaking all the time. That is basically how much you can have in your wallet, just to protect the banks.
So the official limit will be around 600 or 300 euros actually, so super small. Because of you will have a reverse waterfall model, like Fran said, because the problem is not only the bank run, that the digital euro is kind of more valuable than the normal euro you will currently have, but also if people would hold too much digital euro, it would endanger the normal commercial banks, because they are printing money out of thin air and are giving loans on it. So if people would then start holding own money, which is completely collateralized or is direct debt to the central bank, then their whole system wouldn't work. So they are currently now, with all the politicians, we are fighting actually to kind of stop the digital euro, because it endangers our model, and it's super hard to then also explain normal people why you have two bank account balances. You have the normal euro and you have the digital euro, and you are only allowed to hold 300 euros in the digital euro. And of course, you can have bigger transaction where it's automated, automatically will be transferred in, but it's still kind of a mess. So, and there's so many feature creeps that people are putting in. You want to have a offline transaction and stuff there. So, I don't know if it's really gonna happen because a lot of different banks are fighting actually against of it. And yeah, and then we see normal stablecoins with innovation just moving forward.
Yeah. Thank you. I totally agree with you. That's why I was mentioning that I'm not that sure that they will pull it, because it's really complex. Yeah, it is really complex, and I really doubt about how good people they have for this.
Okay, before this is getting into a way too advanced discussion about stablecoins and the European stablecoin of the euro, which is also something that we definitely like to hear more about sometime. Let's wrap it up for now. Thank you so much, Fran. We have one last announcement, but it's very dear to my heart. We have to change computers again. It's just a small thing, and it is about the Startup Festival that is going to happen tomorrow and on Friday. We are just changing the computers, but you know how we are at CryptoHop with some technical issues. It cannot be without it. I think we have it here. Yes, that is it. Tonight, the last little pitch, it's just going to be a little announcement about tomorrow that might be super interesting for you, because there's many opportunities for startups and also for investors, given to you by Yusuf from Supercharger Venture.
Hi everyone, just two quick disclaimers. I don't know anything about crypto, so I'm just a very good friend of Faris. I will one day, I'll become rich like all of you guys. And then second disclaimer, I'm not the smartest person in this room, but that is obvious. So nice to meet you all. I'm the director of the accelerator programs with Supercharger Ventures. Been in Malta for the past 2 years, and I found myself that my DNA is fully Maltese, as my mom is Italian, my dad is Jordanian. So I look like them, I sound like them, and at heart, I'm also Maltese. So cool. The festival is the 5th edition, super cool. I think it's the most relevant one for anyone that wants to understand more about the ecosystem in Malta. Supercharger will be leading the, let's say, accelerator part with 19 companies. I will distribute some of these later. We have 19 EdTech and Future 4 companies. We are the biggest EdTech accelerator in the world with 177 companies in our portfolio. And the past 2 years, 70 companies that we accelerated in Malta. So a lot of numbers. We're going to have a lot of people coming in the booth tomorrow, so come say hi. We'd love to meet some of you tomorrow. The startups are staying here for 3 months. This is their 5th week. So we're trying to give them the good side of Malta before going into the bad side. But I hope you come say hi, and thanks again for the opportunity, Faris. I'll distribute this a bit later. Thank you very much.
Yusuf, don't worry, they are never going to arrive at the bad side because they will be stuck in traffic. I see you here next week, where we are going to talk about monetary supply and capital goods. Thank you very much, and see you at the bar.